All right, hi everyone. My name is Brian Eisenmenger, and welcome to the 1040 Files. This is a podcast of all things tax. And today I have a special guest with me. I have with me Shaun Hunley. Shaun, thank you so much for being here today. I appreciate you taking time out of your schedule.
Yes, Brian, thanks so much for having me.
Ladies and gentlemen, what you don't know about Shaun is probably, and I don't know anybody, and that's what I told Shaun before we even started this. I don't know anybody who's written more extensively and maybe spoken more extensively than on the topic of the taxation of cryptocurrency. So Shaun is the executive editor. He's a tax attorney, which I know, Shaun, that kind of makes you a nerd of nerds, doesn't it?
I am a nerd of nerds. I've
Yeah, I'm
been a
with you
tax
there, bud.
attorney. Yeah, 20 years for doing tax law.
He's an executive editor with Thomson Reuters. I've seen Shaun and speak on the topic of crypto at Thomson Reuters Synergies conference. I've spoken at the conference with Shaun. I'm always amazed, Shaun, when you speak, you have a room of 500 or 600 people. And when I speak, I have a room of 250 people. So I don't know if that's maybe on me or what, but it's always impressive. So,
Well,
Shaun,
thank
today
you.
we're going to talk about the taxation of cryptocurrency. And
Yes.
tell me if I'm wrong here, Shaun. This is kind of the Wild West out there. It's been the Wild West. When did the IRS, let's start going back a little bit, because a lot of people are holding cryptocurrency and it's becoming more and more mainstream than
Yep.
it was, let's say, 15 years ago. I don't even know if it was around 15 years ago. Let's start there. What is cryptocurrency?
So cryptocurrency is a type of digital currency. So a lot of people ask me, well, I don't understand because I don't physically see it like I do with paper money. And I get it. So it is out there in the universe, right? It's digital, it's virtual. And the reason it's called cryptocurrency is it's a type of digital currency that uses what's called cryptography.
Okay.
And cryptography has been around for ages. They used it
Okay.
way back in the dark ages. It's basically encoding and decoding data.
Okay.
And it's just a fancy way of doing that virtually through servers and computers. We call those nodes. And that's what it is. It is a type of digital asset that uses this technology called cryptography,
Okay.
and it is stored digitally on what we call the blockchain, which is a digital ledger that stores these type of transactions. The first time we saw a cryptocurrency was in 2009. So yeah, it has been around for quite a while and that was the introduction of Bitcoin, which
Okay.
I'm sure a lot of you have heard of the word Bitcoin. It's the
Sure.
most popular, most well known, and the most valuable cryptocurrency out there currently. And we saw that in 2009. It was created by somebody or a group of people. We're not sure who actually created it, but they used a pseudonym, Satoshi Nakamoto. So that is just an alias. It is the whoever created this, that is what they called themselves. And so
Wow. Okay.
they released a white paper in 2009 describing what cryptocurrency is, what Bitcoin is, what the blockchain is, and how it works, and the benefits of using it. And I would say the biggest benefit is it takes out the middleman. It is decentralized. We don't
Okay.
need a centralized bank or a group or administrator to help digital assets happen and have those
So,
transactions occur.
So tell me if I'm wrong here. I might be jumping ahead, but just on my conversations with clients, it really serves a benefit for people who are working internationally. Tell me why.
Because usually, when you want to do an international transaction, let's say you use a traditional bank, you could even use a credit card company. It takes a little bit of time to get those transactions processed. You know, it
Okay.
can take up to 24 hours, for example. B, there are generally fees associated with those transactions, and they can be quite high, especially credit card fees, right? When you're using digital assets, the transaction is very quick. It
Okay.
knocks out that middleman, so you don't have to go through that third party intermediary. You've got it happening really quickly. So that's a benefit. And two, the fees are much lower to transact with Bitcoin and cryptocurrency.
Well, it's funny you mentioned that because I just saw in the Wall Street Journal recently that I think it was Chase, might have been Chase or Citigroup, is holding on to billions of dollars, I believe, of Russian currency that they were trying to transfer to Turkey. And when you describe this, you go, well, why are they even transferring their currency when maybe they could do this via Bitcoin, what I'm hearing you say?
Right, right. And because Bitcoin generally is not as regulated as the bank industry, that's why people are starting to use it even more. Unfortunately, people also use it for illegal activities.
Yeah.
Um, I will say that's a misconception. Everyone thinks the majority of Bitcoin transactions are illegal. That is not true. But unfortunately, some of it is used for illegal activities because I'm not going to say it's an anonymous transaction because that's not true. We can ultimately find who is transacting in Bitcoin.
Okay.
It's pseudonymous, which means that we're not using the normal type of identifiers when someone transact. We're not using a social security number. We're not using a name even,
Okay.
but we are using a digital address. It's
Yeah.
a digital wallet. So even though we're not using kind of the typical identifiers of individuals transacting, we still can find out their identity at some point.
So let's go back here. So obviously, the IRS started in 2009, and the IRS, they're not sure how to handle this thing. It's kind
Right.
of, it is and has been, and maybe we're getting better with it, but it's kind of been the Wild West out there because, again, you've got these transactions that are taking place, and this is all the IRS doesn't have any idea what's going on. So you can see that there is a lot of propensity and potential for US citizens to defraud their government in their taxes.
Absolutely. So the IRS, as we all know, they're kind of behind. They're behind the times. It takes them a while to study new technologies, new
Sure.
issues, and then kind of figure out how to treat it for tax purposes. So Bitcoin came out in 2009. The IRS did not take an official position on the taxation of crypto until 2014. So it took them about 5 years to really figure out kind of what this was. And so they issued a notice in 2014 that basically said cryptocurrency is treated as property for tax purposes, not as currency.
Well, that's interesting because in cryptocurrency, the question is where does it derive its value?
Yep.
And to those who are in the crypto world, they kind of smile and go, well, where does the US dollar derive its value or any currency
Yeah,
derive
right.
its value? In 2014, they said they're not treating it as currency, they're treating it as property.
That is correct. And one of the main reasons the IRS said this is because at that time it had no legal tender status in a country. That is no longer true. It has
Okay.
legal tender status in various countries now. And then a few years ago, the IRS acknowledged that, but said, we're not changing our position. We still think that it's property, not currency for tax purposes.
Okay, so now it's property. Now take me through that was 2014. Because I have a question in when it's considered property,
Yep.
then the question comes up, is it a capital asset? Now, this is where Shaun and I get really nerdy because of how the IRS defines what a capital asset is.
Yep.
Capital asset is defined by what it is not rather than what it is in the Internal Revenue Code. And then the question comes up, if it's property, is it a capital asset? It doesn't fall in my reading of the code, Shaun, as an exclusion
Right.
unless the IRS says, well, it's personal property. So tell me about that. Tell me where we're going with that.
Yeah, I think just like any type of property, you have to characterize it. Is it personal property? Is it business property? Or is it capital, right? Is it an investment? And the IRS generally takes the position for most taxpayers, it is a capital asset. It is an investment, just like stock. And so I always tell people think of crypto more like stock in a way. It's
Okay.
property. You can trade it on an exchange. It has value. You're going to either have a gain or loss anytime you transact with that property. So, yes, for most of you out there, if you're just buying crypto, holding it in a digital wallet online with an exchange, for example, that's going to be an investment to you, and that's going to be a capital asset. So then you get into the whole thing. How long have you held the asset, right? Is it going
Yeah,
to be a short-term capital asset or a long-term capital asset? And that's going to be something you have to analyze going
exactly.
forward. Yeah.
So let's talk about, because a lot of our viewers, a lot of our listeners, they might have crypto, they might have bought it, they might exchange it. How is this held for tax purposes? I mean, the IRS doesn't have any notice of it. They don't know that I have it. Do I need to report it?
So for the longest time, the IRS really didn't know who held cryptocurrency and when they were selling cryptocurrency. But starting around 2019, they started issuing what we call a John Doe summons to Coinbase. And for those of you not familiar, Coinbase is probably the biggest and most well-known exchange platform out there. They are publicly traded. So a lot of people buy and sell cryptocurrency using Coinbase. The IRS used a John Doe summons, which is basically we don't know the true identities of these taxpayers, and that's why we're trying to figure that out because we want to know who sold and exchanged cryptocurrency and probably had taxable gain and did not report it on their 1040. And so they did that and they were successful. They got a lot of names and data from Coinbase and started issuing letters to those
Okay.
taxpayers saying, "Hey, we think you had some gain here. We don't see it on your 1040. We're going to give you the opportunity to report it." And so that happened in 2019, 2020. And now the IRS is doing some other things. They have some agents out there. They initiated a project called Operation Hidden Treasure, which is kind of a fun name, right? It's sounds like
There
a
you
movie.
go.
But it was basically training some of their agents to actually analyze the blockchain. They're not completely there yet. They're still training, but their intention there is to root out different type of transactions on the blockchain themselves. Instead of going through the exchanges, they're going to look at the blockchain independently. So there's that. And then the biggest development, which goes into effect this year, 2025, is the broker reporting rules. These regulations came out last year and they were a big deal. And they are effective for the most part starting this year in 2025. And this
Okay.
applies to custodial brokers. So these are actual exchanges or hosted wallet providers that take custody of the digital asset for the taxpayer until the taxpayer decides to exchange that asset or sell it off for cash. And so those are considered brokers. Just like a stockbroker, for example, they are going to be required this year to report the sales of the cryptocurrency.
So up until this point, no one was required to report the sales.
Not really. No.
And
Mm-mm.
taxpayers, I don't like to say this, they've been on what I call the honor system.
There are people out there, and I would say most people do not understand
Yeah, now
the
that's where
the
we're going here.
the general premise that the IRS said in 2014 that it's property. They think it's just like cash, and so they don't think there would be a gain or loss when they
There
get
you
rid of
go.
it.
And maybe that's right there the thing to say, Shaun, is that there you have that people just don't understand what they're to do. And man,
Right.
I don't know if you've seen, but man, some of these exchanges that people have through the year are pages and pages
Yes.
and pages, and haven't even gotten there yet, of transactions. Talk to me about right now someone who's doing their taxes.
Yep.
What is their record keeping requirement? How the heck do they do this? What's a taxpayer to do if they've got crypto and they've got these transactions?
Yeah, it's so difficult right now because, like I said, these rules are starting now. So
Yeah.
taxpayers won't get It's called a Form 1099 DA, which stands for digital asset. They won't
Okay.
get that until next year, 2026. So if they're doing their taxes now for 2024, they're not going to have this handy form that tells them what they sold their crypto for. So what do? And this is actually very hard for taxpayers and tax professionals that are doing these tax
Yeah.
returns. The best thing you can do right now is, yes, there are statements that you can get from the exchange. So Coinbase can give you a statement, but not all the statements are in a kind of handy, identical format. So
Yeah.
it's very hard for a lot of tax professionals to figure out
Some of
what
these are written
exactly
in ancient
happened.
Greek, I swear. I mean, it's hard to understand.
Yeah, because they have like all the little digital addresses and all those things, and you think, what is going on? But just like any type of property, there are several things you need to know when you file your tax return. You need to know what we call the amount realized. That's basically what you sold it for. If you sold Bitcoin in 2024, what did you get back? What
There you
was it,
go.
cash? Did you exchange it for another digital asset? What was the value of that when you received the other digital
Sure.
asset? That's your amount realized. Then you need to know your tax basis, which I think is a little harder to calculate than amount
That's the hard
realized
part.
because you may have purchased Bitcoin. Let's say you purchased it in 2009 when it first came out. If you did, you're very wealthy now, that's for sure. But you may not know what your tax basis was, which is essentially what you paid for it, and then plus probably some transaction fees, right, that you paid.
So what recommendations other than get on your knees and pray do you have for taxpayers out there who go, I don't know what my basis is? What would be your recommendation on that?
That's hard because what does the IRS say? Like, if you can't substantiate your basis, what do they assume? They probably will assume a zero basis, right?
Exactly. And that's not right.
And that's not right. It's not technically accurate. But then how do you prove what your basis is? A lot of the exchanges, they do have pretty good records, I would say, that would at least tell you what you bought your crypto for. And if they have that, that's your starting point. Now, again, basis is made up of other things as well, like transaction fees, for example, that you've paid. That you may not know. So you may have to
Yeah.
take a more conservative approach and just say, hey, I bought it for this. Another thing you can do, and the IRS is okay with this generally, is there are what we call aggregators out there. There's ways you can go online and you can type in a date, you can type in the type of crypto that you got, and it will give you the average trading price on that day. That's also a pretty acceptable way of kind of substantiating what your basis was when you purchased it. So
So
there's
that's
that.
for 2024
Four. Yep.
and any previous years. So anything else we should know about for this tax filing season? We'll talk about next tax filing season in a bit.
It's important that you know your holding period as well, just like with any asset. So if you held it for more than a year, your crypto, you would get the long-term capital gain treatment, which is what you want because
Yeah.
those rates are lower, right? The highest one is 20%. Your highest short-term capital gain rate is 37%. So that's a big
Yeah.
difference, right?
There you go.
So it's important that you know how long you've held it. Now, a lot of crypto investors, they're impatient. They get a little nervous because the prices jump so
Yeah.
drastically. So a lot of them will have a short-term capital gain because they like to sell things quickly
Well, a
because they
lot of
get
them are
nervous.
trading it. It's a trading it, and it's just what they're
Yes.
doing. They're trading crypto, and it's just been one of those things.
Right. So those are the three things: amount realized, basis, holding period, just like any other
There
property
you
when you
go.
sell it. Yeah.
So the world has changed on January 1st for
Yes.
2025 going forward. And the IRS, and you alluded to it earlier, has now issued that is starting next tax year,
Yep.
clients are going to get, taxpayers are going to get from their exchanges a form, what's called a form 1099 DA. Tell me what's going to go on there. Is the IRS now going to have all the information from all the places?
Yeah, so starting out for this year, the IRS will have a lot of what they need. They're not going to have everything they need to verify gain or loss that's reported. But for this year, the brokers, and when I say broker, I'm talking like Coinbase, Kraken, some of those online exchanges, any type of company that hosts a digital wallet for you. I'm also talking about digital asset kiosks. Like if you've ever seen those in the mall, you can just buy Bitcoin in a
Really?
kiosk. They're
I
also
This shows
subject.
how out of it I am. I
Oh,
haven't been to
yeah.
a mall and I don't know how long. I have not seen any digital asset kiosks.
It's funny. I went to a mall in Knoxville, Tennessee, of all places, and there was a Bitcoin kiosk. And
No
I took a
kidding.
picture. Yeah, I took a picture of it because I'm like, look, even in Knoxville, Tennessee, you can just
And now
buy,
hold
you
on a
can
second.
buy.
Don't say even if. I want you to know the brains behind this podcast is in Knoxville, Tennessee.
There you
That's my
go.
daughter. She's at the
Yes,
University of
of
Tennessee.
Tennessee.
So
Yep.
so that's the so we're gonna play up Knoxville as much as possible
Yes.
here, Sean.
Love it. Love it. So I was like, wow, I can buy Bitcoin in the mall. They're considered brokers, so they're going to be
Okay.
subject to these rules. And then there's also what we call a PDAP. So that's an acronym. We love acronyms in the tax world. Those are basically companies that process digital asset payments for customers. So one of the biggest is called BitPay. They're a third-party vendor. They will
Okay.
handle transactions. So let's say you have a small business that decides to accept Bitcoin. They can use this third-party vendor to process the payment for them. And many times the third-party vendor will take it, they'll convert it immediately to US dollars and then pay the small business that way. Because
Wow. Okay.
the
Gotcha.
small business usually doesn't want to keep any type of crypto. Some of them do, some of them don't. So those type of groups, they're all considered brokers. And so for 2025, anytime there's a sale of a digital asset, they're going to have to record the gross proceeds of that sale. So unfortunately, just for 2025, we're not going to see the tax basis amounts of the crypto being sold. We're just going to see the gross proceeds. That is a good thing, but also kind of a bad thing when you're preparing a 2025 return next year, is you're still going to have to go back in time, look at all the records to figure out what was the basis of the crypto being sold.
Is there any requirements, just like there have been with stock brokerage companies, Schwab and
Mhm.
whatnot, that they have to report basis? What will happen with the reporters of the digital assets, the sales? Will they at some point be required to report basis as well?
Yes, they will.
Okay.
Yes, absolutely. So what the IRS was doing is they were trying to phase in the requirements. They were trying to
Yeah.
give the exchanges some time to get their systems up and running so they could actually track basis. And I would say a lot of them they're getting there, but they're not quite there yet. So I appreciate the IRS for doing that, kind of phasing in all of this
Sure.
stuff. So starting next year in 2026, so these are forms that taxpayers would receive in 2027. So for the 2026 year, brokers are going to report gross proceeds as well as tax basis.
How are the brokers going to get basis, or is it going to be one of these things kind of like with stock transactions? If the broker doesn't report basis, they say we don't know basis, or how's that going to work? Do you know?
That's right. So obviously for new acquisitions of digital assets with that exchange, they will know the basis. So they will
Okay.
definitely report that. That'll be easy. What's harder is if you are transferring an asset you already had into the exchange and they
Yeah.
don't know basis, right? There is a way where the taxpayer can provide that information to the broker. They can say, here's what I paid for it, here's my basis. And then they can rely on that statement. If they don't have that information, yeah, they won't know what to report, right?
Yeah. There you
So
go.
that's another complication where the taxpayer has to go back in their records and try to recreate basis. And that's probably the biggest thing to do, most
So,
difficult.
the biggest thing I take away, and it's the hard thing because nobody likes doing it, is that taxpayers, it's just required. You got to keep good records.
You do.
We talk about it with crypto, and it's an easy subject, but it really has to do with everything in your financial life. The IRS requires you to keep good records, and
Yep.
it's just one of those things. Now, it's interesting if a taxpayer ever gets audited, the
Mhm.
IRS has to prove income, right?
Yep.
But if they also get audited, the taxpayer has to prove basis, has to prove expenses. And so there's that tension there that goes back and forth. And what people I think need to be aware of is that the IRS is upping its game to be able to prove income. And if they're
Yep.
upping the game on the prove income, we had better be ready and upping our game to prove expenses. That's kind of
Yes,
my takeaway from this.
absolutely.
So, Shaun, is there anything else that we should know about crypto and taxation or crypto?
I do want to bring up one thing, and this
Sure.
is a very common experience for a lot of people out there. Many people, when they're buying crypto, they buy it at different times of the year.
Yeah,
They don't just buy one lump sum of crypto, say on February 4th. You know what I mean?
exactly.
They they will take advantage, just like anybody would. You would take advantages of dips in the market. So if the price falls, which Bitcoin fell quite a bit over the weekend, they will want to buy some more, right? Because they're
Sure.
saying, I'm going to get this at a discount and it's going to go back up. So what we see here are different batches of the same type of cryptocurrency.
There you
So
go.
I may have Bitcoin that I bought for 4 years ago, then I bought it, last year, and then I bought some right now. And so the question is, when you are selling that Bitcoin, how do you know which batch you're selling, right?
Yeah, you
Because
got that right.
they're going to have different basis amounts, they're going to have different holding periods. And so the IRS in their regulations, they did address this, and I thought it was a good thing. Basically, what they say in the regulations is you're allowed to specifically identify which batch you are selling.
Oh, good. So you
So,
can you
yeah.
can say I'm selling this one that I bought on July 30th,
Yep.
2024.
Absolutely. And
Gotcha.
that's a planning opportunity
There you
because
go.
there may be times where you want to do the batch that had the highest basis amount, right? So you want the lowest amount of gain, or maybe you want the opposite. Maybe you have a bunch of capital losses and you want a high capital gain, and so you sell that one. So that's a way you can get with your tax professional and kind of do some planning. But the IRS then says, well, if you don't specifically identify which batch, then what happens? And so what they use is what's called first in, first out, or
Okay.
FIFO. We call that in the tax
Yeah.
world FIFO. So if you don't identify, then the default will be whatever was first, initially purchased will go out first. So that is in the regulations, and that's a very important concept for people out there.
There you go.
Yep.
Well, Shaun, this has been very informative. I so much appreciate you
Yeah.
taking time out of your schedule. And again, cryptocurrency, there's a lot to it, a lot to know, not just from an investment standpoint. Forget that. This is just from a taxation standpoint. So,
Yes.
folks, if you've liked this podcast today, hit the like and subscribe. Also, in the comments section, we'd love to hear from you any other topics that you'd like to hear. We've talked about the IRS, we've talked about credits, we'll be talking about income and retirement. We've talked today about crypto. We'd love to hear more things of what you'd like to hear about. So, again, thank you, Shaun. I appreciate you
Yep.
being here. And the rest of you folks out there, go conquer your worlds. Thanks so much, Shaun. Thanks, everyone.
Thank you.